The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks, and I want to wish everybody a happy holiday. As we all know, the day before the 4th of July has a 70% probability of closing higher in the stock market, and we've had that ABCD formation form on June 30th in the New York Stock Exchange Index. We also had that Jupiter conjunct Venus that happened at that same time, along with the full moon, so a rally was to be expected. We should go into today as a rally. We're closed tomorrow, so I'm going to give everybody the day off. And don't remember to have a happy 4th. Make sure you buy a 5th on the 3rd. That was back in the days when Indiana had dry days. You couldn't buy whiskey and beer and stuff during holiday stuff. I don't remember why, but I never drank very much, and my grandfather made his own wine and grappa, so I don't know what that meant, but it was a funny joke, I suppose. Let's get on to the word at hand. Let's start out with, we'll go back to the stock market a little bit later because I want to share some things that John Murphy forwarded on to me that I think are interesting. The silver, I posted into the chart that silver showing the 20-min line, which is that trend line, that uptrend trend line that once the market broke through it, we were expecting it to go back to that line. It went back to the exact price within a penny at $15.95 per ounce, and now we've broken down. The gold and silver still look lower to me, folks. They just I'm going to show you a gold chart here in just a minute that I think pretty much explains it, because once we broke that 1185 level from last week, it really pointed that we were heading down towards that 1140 level one more time to get down there. But there's 3 objectives down there that we could be hit, and I will certainly be looking to go long gold down in there. The reason is, of course, that these ABCD patterns. You know, that's really what the market does all the time. It goes up, down, or sideways, and it does it with this Thunderbolt ABCD pattern. I don't care what chart you're looking at, what vehicle you're watching, that's exactly what the market's doing. They go up, down, or sideways. The question that you have is, how are you going to determine, where that final spot is going to be? Okay, let's move on to the gold market here for a second. And I wanted to, by the way, most of the commodities are getting hammered. It's just the corn and, wheat sold off 50 cents from the high the other day. Corn and beans are still way up in the air, so they're acting pretty nice. Hold on here. I've got an alert going off, and I want to see what it is. It is in the what is it in? It's in the euro. Sorry, it's not the. I'm sorry, not the euro. It's in the DAX index. Has broken down badly, and that's it was telling me that it was heading down. I just wanted to, keep that alert in the market to see what's happening. So turn that off. We should be okay. Now I got to get back to my train of thought. The gold. Okay, the gold. I wanted to show you the chart on the gold, and that's the one that I think will give us a pretty good idea of where. If you like ABCD patterns, if you don't like ABC patterns, that's unfortunate. Hold on just a second. I'll get this puppy up here and we'll take a look at it. Okay, there's the gold going back over the last year and a half. Okay, we had that high up there at almost $1,400 an ounce, which was a 61% retracement from the high at I believe 1,700, and it was a 50% retracement for the high at 1932. So we're basically moving down in ABCD format. And if you can see this chart here, if you look at the low we made back in December of 2013, Then we had another one 2014 and another one coming up now. We're going to have a 3 drive to a bottom pattern here, folks, and there's going to be a lot of levels to look at. Now, I talked a little bit about this level of $1,135 an ounce, and we're trading it, just above 1160 and change. We got down to 1156 this morning, and it bounced, somewhat. So we'll see what's going to happen. But I still think gold has a chance, and I'm probably grasping at straws, but God, this market's been good to me through the years, and so is silver. And so when I try to find a place to buy it when nobody's wanting to buy it, I really like to look at it. But believe me, I've been trading it from the short side, and it's much easier to trade things that are dropping like a rock. So the price that I'm looking at on this move down is about $30 away from where we're trading right now. I'm looking at around 1135. That's going to take out the low of March of last year, or this year, March of this year, because that low was at 1140. So we could knock that out. There's an ABCD pattern coming in there. The longer-term ABC patterns, there's 3 of them down there. One of them measures at 1086 per ounce. The other one is 1068, and the really long-term one on the long-term weekly charts is 1046, which is $120 from where we're trading right now. So we could get, a big move down, but I'm going to be looking. I trade both sides of it, but when it's dropping like this, I look for targets on the downside, and that's what I'm looking at. As far as I've had several people ask me, because I've been recommended buying silver over the last month or so, even though it's been going down. And what I'm recommending buying, of course, are the silver rounds, the thing they call double eagles. They're American Eagles. They're U.S. minted coins. They are 1 ounce of pure silver. They're absolutely beautiful. They have the American Eagle on one side, and I don't even remember what's on the other side. Oh, it's I think it's standing St. Gaudens on one side, and the American Eagle on the other. And Augustus St. Gaudens was the man who was the sculptor for the $20 gold piece back in, oh God, it was 1900 and something. I forget what it was. But Augustus St. Gaudens, he made these coins, and the first coins that came out were called high relief coins. In other words, they had the image of the coin was just absolutely sculptured beautifully. But the problem is when you tried to stack the coins in the mint, they would fall over because the sculpture, each of the pictures of the St. Gaudens figure itself, the sheath and the breasts and everything were making the coins wobbly because they were actually sculptured. These coins, the last price I had on them was about $50,000 a piece. I owned one back in 1974 for $20,000. I sold it for $25,000, and I don't know what they're going for now, but it's called a high relief St. Gaudens $20 gold piece, and I'm going to Google that when we come back to find out what that thing is going for. Now, I could call one of my coin dealers buddies over in California, but he's asleep and he would get mad at me. So, but that was a really incredible coin. It is the most beautiful coin. No, that's not true. The most beautiful coin that I've ever held in my hands is owned by one of our folks here at Tiger, in the Tiger Den. And there's only 6 of them in the world. And it was minted in 1794, 1740, something like that. It is the coin that was done for Isaac Newton when he was Chancellor of the Treasury. Back in the UK, and that is what's that called? Oh dear, it's incredible. It's a little over an ounce, but it is really the most beautiful coin that I've ever held, and it's over $250,000 as near as I can tell. So, but I will check on that cost of that high relief sculptured St. Gaudens. They're hard to find. Most people have never seen one, but I've seen a couple through the years, and they're actually very, very, very beautiful piece. So I think gold and silver are heading down. I really believe that we're moving in an area where we're looking at deflation coming in. We see it just about everywhere, with the exception of real estate in certain parts of the country. Like San Francisco and Boston and New York, and there's quite a few places that are pretty expensive. But other parts of the country are still not too bad. Areas of Arizona have been hit pretty hard, as well as Nevada and other parts. But, real estate has held up, come back quite a bit from where it was. One of the questions someone asked me about this jobs report, folks, I don't know what these numbers mean. I mean, they change these things so darn much. It's ridiculous. Back in the 80s, when I was on the floor of the exchange, the number was the money supply number, M1 and M2. That came out at 1:15 every Friday, and we lived and died by those numbers. The money supply in the last 4 years has gone up 400%, and nobody gives a hoot. If this were the old days of 82, 83, 84, 85, gold would be at $4,000 an ounce, period, if they had a 400% increase in money supply. So, that we just have a huge amount of debt. Debt is the problem out here, folks. Debt is the problem. That's the one that's going to whack it. Now, we've had big drops, as Tom O'Brien mentioned before. We had big drops in Japan. It's down 25% off the high. The Chinese market is down 25% in the last 2 weeks, and if that doesn't constitute a bear market, I don't know what does, and that's just getting started. And, we have margin debt as high as we've ever had it, and so, our market's, it's holding up here with smoking mirrors, as near as I can tell. And the fact is, let's just show the first, this is from John Murphy, the Dean of Technical Analysis. I'll just put this up here and let you folks take a look at it. It's about his indications for weekly RSI showing a negative divergence. It's, basically showing, the strength of the market, and that's what we're looking at here. And, he said, back on May 30th, and this is, remember, back on May 19th, we were talking about this. This is when we had Norm Winsky on the horn, and he was telling us about the Mercury, and Mercury going retrograde. And we're going to have Norm on, I guess next Wednesday. Yeah, Norm's going to be on with us next Wednesday. He's got some cycle dates coming up to look pretty good, and so we'll watch those. But if you'll notice, what Murphy's saying here is this 14-week relative strength index line has been sloping down all the time when the market's trying to make new highs. This is not a good sign, folks. I mean, we've been talking about that. I don't know much about the fundamentals, but that really doesn't look like, what it really looks like. He's got another one here, and this is the one that I really find interesting, because this tells you what the real market is doing. And this shows you that more than 50% of the stocks in the New York Stock Exchange Index are in downtrends. They're making lower lows than they are lower highs. They're all below the 200-day moving average. More than 50, there's more than 50% of them are below the 200-day moving average that everybody looks at for their method of looking. But the stock market hasn't reacted too much. We had a pretty good move in the VIX that went up to above the 20 level, which we were certainly expecting. But this is just starting, in my opinion. I think the second leg of this is going to be started when we come back, the day after the holiday. Now, they might use Greece as the reason to rally the market some more. I don't know. Then they might use Greece to push it down like we did last Sunday. Last Sunday the market broke, and it's been rallying every day this week. Okay, we're going to take a little break here to pay some bills. We're going to come back and we're going to go over some stock market information.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm back. Oh, good. I thought I'd lost my contact, but I guess I'm okay. I thought I'd lost contact with the computer, but it seems to be okay. I happen to be watching CNBC. I've got it on mute while I doing the show just to keep up with the prices of certain things. And I noticed Art Cashin was on, and I happen to know Art, and he's a real gentleman, a nice guy. He's one of the main commentators at CNBC. And one of my favorite comments about him, this goes back to the boom boom days of 1999 and 2000, and he made a comment once. He said he never trusted anybody's opinion on the market that was not old enough to shave, and that includes the girls. And that place absolutely cracked up when he said that. But we have a lot of people that talk about the markets, including myself and Tom and Basil and John Logan and Steve Rhodes and everybody, and that's all. These are our opinions. You're the ones that have to take the responsibility for your trades. Now we're going to take a look here at the overall breadth of the market. The New York Stock Exchange Index. I've posted this chart. As you can see, we made a perfect ABCD Gartley up there way back on in early June. Let's just put this up here in early June, which was it's not early June. It was late June. It was back on the 22nd. We broke really hard. Not only that, but we gapped below the low of, we went below the low of June 8th, which was in itself very, very bearish, and we stopped again on June 30th. When we come below the low that we made this past week, folks, we are coming down really hard. And they're going to punish these folks. This margin debt is going to be the thing that really whips them. This is what history has told us. Maybe it's different this time, but this is my sense of this, and experience looking at it, because I've been there and done that. I don't want to get involved with it except on the other side of it, but I think they're going to punish them really bad because of the margin debt and the complacency that's out there. No one thinks we can sell off very much. Well, the rest of the world has been whacked around quite a bit. So let's pay attention and see what's going to happen here. Now, we expected this little rally that we're having now coming into Monday, and maybe it'll blow up to the upside on Monday, and I'm going to be proven wrong, but it looks to me like this is a dead cat bounce. That's what it looks like. And if we rally back in the New York Stock Exchange Index to the top of that downtrending line that's there, or that trend line, that's going to be a 20-minute line, and that's going to hit just like we did in the silver, the first chart that I posted into the room today. That acts as a catapult to knock the market back down again. I just don't see how anybody in their right mind that looks at technicals can absolutely think that this market has a chance to make new highs. Honest to God, you look at the breadth, you look at the trend, you look at the number of stocks that are down, you look at the Dow Jones transportation. God, you talk about a market that is, really, it's just setting right at the 786. I can see that on the daily. That's one of the reasons why we thought there was going to be a little bounce this week, and there have. But any more weakness from this level right here, and it's a straight shot. There's just no more. There's just air under this thing. Should I get off my soapbox now? Sorry, I have to see what's going to come back. Okay, all right. Let's take a look. I still think we got a chance, a possibility. Maybe the S&P can get up to that 2082, 2085 level with some Greek thing, but I don't know if that Greek stuff is going to mean much or not. It meant a lot Monday night or Sunday night because the market gapped down 40 handles in the S&P. We'll see what happens with it after that. But the overall breadth of the market is bad. The trend is bad. The pattern is bad. I don't know anything about the fundamentals, but the technicals just look like something on the bottom of your shoe that's been stuck there for a while after you walk through a petting zoo. So just be real careful being long in here, folks. You don't want to be long stocks if we go below this week's lows. Just don't even think about it. And if we should happen to gap below there, woo, that's done in a word with 5 letters, CRASH. And I think that's what we would have. We could take out the low. We could make a 1.618. Believe it or not, folks, we could make a 1.618 expansion on this move during the month of July into the 30th of July. And as you recall, we have a big Bradley date that's going to be coming in there right about that time. So give me 1 second here, and I'll put it up to take a look at it. And you'll see that comes in right about the, I've got to get it down here just a minute. Hold on 1 second. I've got to expand this a little bit so we can all see it. There we go. And that comes in towards the end of July. And then we'll see, if that happens. It actually comes in on right around July 22nd, which is a very interesting time. Okay, we're going to take a little break here to pay some bills, and we'll be right back after these few words.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone's asked me to expand on where I think the Dow Jones could go if we break below this low that we made this week at 17,577. That was an exact 61% retracement within 10 Dow points of the low that we made back on February the 2nd, which was a very key cycle low. Now, we've taken out the low of March the 16th, or March 13th, which was a very, very important low. We took that out just by a little bit, but we did take it out. We took it out by quite a bit in the S&P, but we didn't take it out in the NASDAQ, but we did take it out in the New York Stock Exchange Index. We hammered that. But if we break below this low, below the low that we had at 17,577, there's a potential for the market to come down between now and, well, it could happen between now and July just based on margin debt, but between now and November, the objective that I'm looking at is 16,200. That's an easy 10% from where we are right now, and that's just if it's 10%. You know, it could be maybe if we had a 25% correction like we've had in China and Japan, then you're looking at something, totally different here. But this is the kind of thing that, that we're watching. We have a 3-day rally here, whether it's a dead cat bounce, hasn't even made a 382 retracement of that move yet. So that's another thing. And then we're coming into the first of the for next week, which all the positive bias of the market is gone. The last two trading days of the month, the first two trading days of the month are the most positive days of the whole month. And so we don't have that working for us anymore. That's because there's been such, a preponderance of, ETFs and hedge funds and mutual funds where people have their money, and these folks, they deal with other people's money. They don't have any skin in the game. And so it's a lot different for them. But this is what we're possibly looking for, is this drop in the next couple of weeks. In fact, it's 3 weeks from today. What we're watching to see if it's going to unfold that way. Whether it does or not, I'm not sure. We've got some good buying coming into the market here early this morning, so we'll see what's going on, and we'll have a pretty good look at some of the things that are happening. We've got the Dow making new highs, but remember, the Dow is it opens in rotation, so it does take a little time to get these stocks working. We've got the S&P up 5, the NASDAQ up about 8, so it's still rather quiet. That's really what we're looking at. I think we're just accumulating we were very, very overbought when we came in here on June 30th. So we'll wait and see. Remember that June 30th was a key date because of the full moon and the Jupiter conjunct Venus, which is very important. There were a couple other smaller things there, but those were the main things that actually occurred. I just, each time I look at these charts each day, it marvels to me when I look at the Dow Jones transportations and some of the things, just how negative the market really is. It's actually quite scary just to think about how people could, maybe I'm just, full of myself. I mean, I probably am, but when I look at this technical stuff, folks, boy, it just literally scares me. And I'm a technician. I really don't understand the fundamentals. I got an MBA in finance, but I never could understand that economic stuff. The charts I can understand real easy, but the supply-demand thing, by the time you read those numbers, they're different, and they change them all the time on us. So all I know is that if this economy was really good, stop and think about this. When you buy something, it's got to be delivered to you from someplace, right? And that's transportation. And what has the transportation index been doing? It is far from bullish. Far, far from bullish. If this were the Dow Jones, we'd be at 15,000 in the Dow Jones. I'm going to put this transportation chart up to let you remember what it looks like, because once we go below this next level, it doesn't have any, but we've been going down for a whole year. Can you believe that? No, not quite a year. We started down in November in the Dow Jones transportation, okay? And we've been going down ever since, all right? And now you can see this last down sloping trend line that we have. If we break below that, and we hit the money right on the 786, and we should have a good rally from there. We're up a little bit today, but if it goes below that now, gee, there's no support. Just like there was virtually no support at 618 or 50%. So that's what we're watching, and this would give you another. This market is certainly in a downtrend. I mean, we've had lower highs in March, lower highs in April, lower highs in May, lower highs in June. I mean, this is in a downtrend. Maybe it turns from here. Maybe this is what makes the market go up. If it does, you're going to see a big up day in the Dow Jones. Transportation's up maybe 250 points or more, because it's trading at 8,000. 3% would be 250%. We could see a move like that. Then I would say yes, that would probably be it. But we got the, Dow is up almost 60 points right now. The S&P's up 8, so we're still having a pretty good rally in the market. We'll see how it folds. I mean, yesterday we started early in the morning with the rally and sold down quite a bit, and then came back to close right in the middle to the upper part of the range yesterday. And then today we have taken out those highs, given the jobs report, where the unemployment rate is down to 1% or whatever that magic number is that they're talking about all the time. So keep an eye on those numbers that they give you, because most of them are just total malarkey. Now, I've had a request from Priceline Charlie in La Paz, Mexico, to take a look at Priceline.com. I'm going to put that up. We had a price objective down there at 1,100. Boy, we just missed it by a heartbeat. Let's just pull it up here, and we'll see where we are, because we got within wow, that's really close. We got within $8, an $1,100 stock of where it was going to go. We'll just put this in and take a look at it. We still might get there, but it was very, very close. You'll see, yeah, he's obsessed with Priceline.com, but that's because he's shorted it every time he gets around 1,200, and he covered his shorts, if you remember, down around 1,000, and he's done very well with that. So we want to keep our hats off to that, and you don't want to ever damage anybody's success, because pride goeth before the fall, folks. So don't ever badmouth people of what they're doing or anything like that. It's just not necessary. So that's the main thing. I have to tell you something funny that happened yesterday. We have here in Arizona for the 4th of July, we have a poker tournament and stuff. And so I was playing yesterday evening, and I happened to be in a game, and the gentleman just sat down in a game. It was his very first hand. It moved from one table to the other. And he got a phenomenal hand, a royal flush, and everybody at the table was paid $100, just because we were at a table where somebody had a royal flush, because the odds of getting that is just under 1,000,000 to 1, and so they pay you $100 to the 9 people that are there. Now, I used my money very, very efficiently. I used it on whiskey and gambling and cars. The rest of it I'm just going to squander. That's an old W.C. Fields joke. Okay, no more jokes, otherwise they're going to put me in the Chuck Norris Hall of Fame. The next question someone asked me about was the chart of IBM. Let me put that one up and we'll take a quick look at that. I think it's had a pretty good run here recently, as I recall. Last time I saw it, it was about 180. Whoop, that tells you what I know about it. It's been a very nice technical stock. You can see, this is very interesting. We focused on this once before. There's another reason why. Yeah, here we are. We've got. Hold on one second. We'll take a look at this. We talked about this once before in the program, evidently, because I've got it marked. You'll see IBM has been in a downtrend since May, actually April 27th. We just hit the 61% retracement this past week. So that tells us that 162 is very important at IBM. As long as we don't take that out, we have a rally potential, going on in IBM, but it's not the most bullish stock in the world. This thing has got hammered. Well, we should do it. Yeah, we should do this. Let's go back and look at this a little bit bigger, and you'll see how technically perfect IBM is, which it should be, because it's one of the larger stocks. And it's been in this really long-term downtrend line for, quite a bit. So we'll watch. 1 second, please. We'll watch to see if this 160 level holds in IBM, because that is a perfect ABCD Gartley pattern that formed this week in IBM at 162, and right now we're trading at almost 165. So it's moving in the right direction. So we'll see what's happening. Okay, now we've got to have one other question, and that's our favorite stock, Apple. Everybody, I don't know, Apple gets more free advertising than any firm I've ever seen in my life. And most times you get the advertising, it's bad advertising, because people are getting sued or they're putting the executives on the carpet. But Apple gets they get the award for being the best advertised firm for free in the world. And believe me, that the amount of money that they spend talking about this is a great deal to really look at as far as the free stuff that it has. I saw my first Apple Watch yesterday too. They can keep that. There was never any way I could get to use it, but I have a hard time using a cell phone. So, okay, now here's one that you want to take a look at. That is this is the ABCD here in Apple. It looks like we're heading down to 121. The high we had was at when we made the butterfly top up at the 134 level. That was after one of the earnings announcements, and we've had lower highs in May. We've had lower highs in June, and it's like the rest of the market hasn't fallen apart yet. But the minimum objective here is 121 to 122. Down another 3 or 4% here in the IBM for that. Now, I wanted to move over here and talk about the Treasury notes, because I think we've had a pretty good rally so far off the Treasury bonds, but I wanted to put the Treasury notes up here because we should be getting ready to form some type of a bottom in here. We've tried several times, and we'll see if that's going to be the case. We've made the first major objective in this, and now I believe that we have a possibility for the first time in a long time of getting a little bit of a bounce. However, the long-term bond picture, folks, is that, it's just rates are going higher. I mean, you could do what the Federal Reserve tells you, that they're the ones that are taking care of the rates, but the market is taking care of the rates. We've seen bonds drop in price since January, and ever since, when bonds go down in price, interest rates go up. When notes go down in price, interest rates go up. So interest rates have gone higher. Just because the Fed hasn't raised the rates of the banks doesn't mean anything, but that gives the banks a huge advantage. That's one of the reasons why the bank stocks were so strong, is because they get free money and they lend it out at a higher rate. You notice you don't get any kickback on your credit card or anything when the interest rates drop. Of course not. That's not the same thing. I remember when they first started introducing credit cards back in, big time. We always had Diners Club and Carte Blanche, but we didn't really have anything like a Visa and American. We had American Express. Yeah, we had American Express, Carte Blanche, and I think Diners. Maybe Diners Club was one of them. I don't remember exactly, but those were the ones that brought in the credit. And I don't remember. I never had one because I never used credit. We didn't have to worry about that with the automobiles. Renting a car and stuff. You just paid cash. But with all this credit stuff, your credit score means a whole lot right now. Okay. Anyway, the notes and bonds have a chance to have a rally here, and I don't think it'll rally be more than 4 or 5 points at the very most. But the Fed will be raising rates sometime. They have to, because they're not going to stay at zero forever. Maybe they are. It's been a 33-year bull market in lower interest rates. That ended in January of last year, and they just haven't told the rest of the world about it. So want to keep that keep that in mind to see what's happening. We got the market is still rallying. We got the S&P up about 7, Nasdaq's up about 10, the Dow's up about 60, I guess, and so things are holding up pretty well from the early part, and they should, because we're in a bullish bias here. All day today, with the day before the holiday, has a really hard time to be going down. And so don't be surprised if we don't close right on the highs. The question is, what happens to us, on Monday? Because that's when all the patterns will be turning from positive to negative, supposedly. And then we should start down either Monday or Tuesday. And with the Greek elections coming in on Sunday, they are going to beat the drums on this thing till there's no more skin on the drum. I can promise you that. They'll just hammer away at how important this is. And frankly, I don't know if it is or not. All I know is the important thing is the debt that's out there is so big that it's overwhelming, folks, overwhelming. And now we're going to head into the final furlong here and be back after these few words.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've got a caller from Fort Lauderdale, Florida. Max, are you there?
Yeah, good morning, Larry.
Good morning. What can I do for you?
I want to thank you for doing the show every morning. I'm as old as you are, Larry, and I don't think I could get up every morning and do a show like you do.
I don't get up, Max. I just don't go to bed.
Oh, is that it?
No, I just don't sleep very much. I never have. Ever since I was a little toddler, my mom said I used to wake up in the crib and sit there and play and sing until they came to get me. She said, and then when I was an altar boy, I would get there before the priest, and I'd knock on the rectory door and wake him up, and then I'd go over to church and get everything set up. So I've just not been much into sleeping.
Did you wake up the nuns too, or just the priest?
I'm not going to go there, Max. The convent was across the street, but I swear there was a tunnel underneath, but I don't know for sure. What can I do for you, my friend?
Can you look at the utilities, please?
Yes, I did. I just posted it in. We gapped up today. We've been very oversold. This was, I think, the 10th day in a row we've been down. We were up a little bit yesterday. We gapped up today. That could be, related to the bond move with a little bit of interest rate help. But this market's very oversold. We hit that 20-minute line about 10 days ago, which was that downtrending line, and then we just broke really hard from there. And if we rally back anywhere near 577, which is up about another 3% from where we are right now, I think it's still headed lower. The only way that this thing would turn bullish for me is if we got above 594. So it'd have to have a 5% run to the upside before I'd even have to think about, being bullish on it. I mean, we made new lows for the year. We topped in January. We had lower highs all through March, April, and May, and June. I mean, this is just a dead cat bounce, as near as I can tell.
Okay, thank you.
Is that it?
Yes.
Well, you live in a beautiful part of Florida. Fort Lauderdale's a lovely place, so enjoy your time down there, my friend.
Will do.
Okay.
Bye-bye.
All right, folks. One of the charts that I posted in here before we talked with Max was a chart from George Baer looking at the speed of Mercury, and we got that coming in today. So that probably will also factor into what's happening with the market. So live every day in an attitude of gratitude, and may God bless. Have a wonderful 4th of July, and thank yourself and your family that we live in a wonderful country. Got lots of problems, but it's still pretty wonderful.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.